High profitable shares in National Stock Exchange. The following are some of the high profitable stocks in the National Stock Exchange, NSE, of India, as of September 23, 2023. 1. Tata Consultancy Services, TCS. 2. Oil and Natural Gas Corporation, ONGC. 3. Life Insurance Corporation of India, LIC India. 4. State Bank of India, SBI. 5. Reliance Industries. 6. HDFC Bank. 7. Infosys. 8. Kotak Mahindra Bank. 9. ICICI Bank. 10. Bajaj Finance. 11. HDFC Life Insurance Company. These stocks are from a variety of sectors, including IT, energy, finance, and insurance. They have a strong track record of profitability and are expected to continue to perform well in the future. It is important to note that this is not an exhaustive list and there are many other high profitable stocks in the NSE. Investors should do their own research before making any investment decisions. Here are some additional factors to consider when choosing high profitable stocks. 1. Financial performance. Look at the company's financial statements, such as the balance sheet, income statement, and cash flow statement, to get a sense of its financial health and profitability. 2. Industry trends. Consider the trends in the industry in which the company operates. Is the industry growing or shrinking? What are the key challenges and opportunities facing the industry? 3. Management team. Assess the quality of the company's management team. Do they have a good track record of success? Are they innovative and visionary? 4. Valuation. Compare the company's stock price to its peers and to its own historical valuation. Is the stock overvalued or undervalued? 1. There are a number of parameters that can be used to say that a stock is high profitable. Some of the most important parameters include 2. Earnings per share, EPS. EPS is a measure of how much profit a company generates per share. It is calculated by dividing the company's net profit by the number of shares outstanding. A high EPS indicates that a company is generating a lot of profit per share, which is a good sign of profitability. 3. Profit margin. Profit margin is a measure of how much profit a company generates from its sales revenue. It is calculated by dividing the company's net profit by its sales revenue. A high profit margin indicates that a company is able to convert a large portion of its sales into profit, which is another good sign of profitability. 4. Return on equity, ROE. ROE is a measure of how efficiently a company is using its equity to generate profit. It is calculated by dividing the company's net profit by its equity. A high ROE indicates that a company is generating a lot of profit relative to the amount of equity it has, which is another good sign of profitability. In addition to these financial metrics, it is also important to consider the company's industry and competitive landscape. A company that is operating in a growing industry with a strong competitive advantage is more likely to be highly profitable than a company that is operating in a shrinking industry with a weak competitive advantage. The following are some additional parameters that can be used to identify high profitable stocks. 1. Consistent earnings growth. Companies that can consistently grow their earnings over time are more likely to be highly profitable than companies that experience erratic earnings growth or even declining earnings. 2. Strong balance sheet. A strong balance sheet, characterized by low debt levels and high cash reserves, gives a company the financial flexibility to invest in growth and weather economic downturns. 3. Experienced and competent management team. A company with an experienced and competent management team is more likely to make sound business decisions that lead to profitability. It is important to note that there is no single parameter that can definitively say whether or not a stock is high profitable. Investors should consider all of the factors above when making investment decisions. Thanks for watching. Please subscribe for more videos.